What advice would you give a young person like getting into the stock market? Like,
stock advice. Wow.
Yes, sir. Yes, sir.
As I think people can perhaps tell who are watching this, these questions are not prepared in advance. This is literally random questions from the crowd, which is cool. I'm fine with that. And I think that it's going to sound very straightforward, but you want to really buy stock in companies where you think the product that company makes will be better in the future. Is that company going to make more and better products, or do you love the products that company makes, and are they going to keep doing that? And I think Tesla, as I've just gone through, Tesla has a track record of having made many great products, and we're going to make many more future great products, and we're going to scale up production, and I think we've demonstrated a level of innovation that is extremely rare. Certainly by far the most innovative company in the car industry, not even close type of thing. I do think Tesla stock actually, long term, with Optimus and self-driving, Tesla will probably be the most valuable company in the world. But there are also other companies out there that make great products and services. So I think that's the way you want to look at it. Say, do you think this product, because that's the reason why companies exist, is to make great products and services. So if you think that a company is going to improve over time, then buy the stock, and if you don't, then don't. And then the stock market it's a very strange thing. It's kind of like, I think it's Warren Buffett's sort of metaphor or analogy is, the stock market's like having someone stand at the edge of your property or your house and yell prices to buy or sell your house every day. And sometimes they take their meds and sometimes they don't. So sometimes the person yelling out the price of your house is having a good day, and sometimes they're having a bad day. But it's still the same house. It's literally still the same house. So Tesla stock goes up and it goes down, but it's still the same company. It's just people's perception of the future. I don't know, I guess it's just very emotional, so. But for me, while it's difficult to predict how things will be from, in the next, say, 6 to 12 months, if you say, where will things be in 3 years or 5 years, the future of Tesla is incredibly bright.
There's two kinds of items that people buy and think they're investing. One really is investing and the other isn't. If you buy something, a farm, an apartment house, or an interest in a business, and look to the asset itself to determine whether you've done something, what the farm produces, what the business earns, and so on, you don't really care whether the stock market's open. You can do that on a private basis. In fact, you do it on a private basis if you buy a farm or apartment house generally. And it's a perfectly satisfactory investment. You look at the investment itself to deliver the return to you. Now, if you buy something like Bitcoin or some cryptocurrency, you don't have anything that's producing anything. You're just hoping the next guy pays more. And you only feel you'll find the next guy to pay more if he thinks he's going to find somebody that's going to pay more. Now, if you ban trading in farms, you could still buy farms and have a perfectly decent investment. If you ban trading in apartment houses or even in equities, if you ban trading in Berkshire Hathaway for the next 5 years, our investors would do fine, over time. But if you ban trading in tulip bulbs, or if you ban trading in some Bitcoin, which nobody knows exactly what it is, people would say, well, why in the world would I buy it? And you aren't investing when you do that. You're speculating. There's nothing wrong with it. If you want to gamble, somebody else will come along and pay you more money tomorrow. That's one kind of game. That is not investing.
When the stock is up 30% in a month, don't feel 30% smarter. Because when the stock is down 30% in a month, it's not going to feel so good to feel 30% dumber. And that's what happens. The great quote that Warren Buffett brings up all the time, but Benjamin Graham said, which is in the short run, the stock market is a voting machine. In the long run, it's a weighing machine. And what you need to do is operate your company in such a way knowing that it will be weighed one day, and just let it be weighed. Never spend any time thinking about the daily stock price. I don't.
How many investments do you have, large, like altogether, active? I'm trying to get a sense for.
I mean, counting all the YC ones, like a few thousand. Personal ones, I would guess 400.
Wow, really?
Something. Well, I've been doing this for a long time.
Yeah, no, absolutely. I mean, and every once in a while I see like a really gigantic deal. What makes a Sam Altman deal?
I try to just do things that I'm interested in at this point. One of the things I have realized is all of the companies I think I have added a lot of value to are the ones that I sort of like think about in my free time on a hike or whatever, and then text the founder and say, hey, I have this idea for you. And I have learned kind of like what those are, and the ones that are not, I think like every founder deserves an investor who is like gonna think about them while they're hiking. And so I've tried to like hold myself to the stuff that I really love, which tends to be like the hard tech, years of R&D, capital intensive, or like sort of like risky art, like risky research. And then, but if it works, it really works.
When you started, how did you learn to invest, and how did your investment strategy change over time?
Well, I learned from my mistakes. In other words, my instinct is, you go there and you place a bet. I've had winners and I've had losers. And what I did, every time I made a mistake, they became painful mistakes, but with time, I realized that reflecting on those mistakes would give me gems. What I would do is I'd say, why did I make that mistake? And I would learn from that mistake. And I'd write down a rule. So what was helpful for me is I put that rule, I wrote these principles down. Those principles that I wrote down, I then put into algorithms, in other words, equations. And what I learned by being able to do that is if I took my decision criteria, those principles, and then I tested them back through time, I gained a perspective that was fantastic.
The most important thing is to be able to define which ones you can come to an intelligent decision on and which ones are beyond your capacity to evaluate. You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, you've got to have a computer. And I said, why? And he said, you can do your income tax on it. I said, I don't have any income. Berkshire doesn't pay a dividend. He said, well, you can keep track of your portfolio. And I said, I only have one stock. I said, and he says, it's going to change everything. And I said, well, will it change whether people chew gum? And he said, well, probably not. And I said, well, will it change what kind of gum they chew? And not. And I said, well, then I'll stick to chewing gum and you stick to computers, I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America, and I'll be able. I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting, and in The Science of Hitting, he's got a diagram, shows him at the plate, and he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy, too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America, and I formed an opinion on Coca-Cola. I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570,000,000. So annually, $6,570,000,000 from 1 penny. Do you think Coca-Cola is worth a penny more than Joe's Cola? I think so. So, and I've got about 127 years of history that would indicate it. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future.